The hidden side of banks and governments. They took everything. Not with guns, not with threats, not even with a letter explaining why. Just a screen that said, "Account frozen pending review." That was 3 years ago in Cyprus, and the man telling me this story had tears in his eyes because he lost his entire life savings in 48 hours. The government just decided one morning that they needed his money more than he did. And you know what the worst part was? It was completely legal. They changed the rules overnight, and by the time people woke up, their accounts were already empty. Now I know what you're thinking. That's Cyprus. That's some small island nation with economic problems. That could never happen here, right? Wrong. It's happening right now, just in ways so subtle, so perfectly disguised, that most people don't even realize they're being robbed. Every single day, every single hour. While you sleep, while you work, while you think your money is safe sitting in that savings account earning its pathetic 0.5% interest. The system has been designed from the ground up to extract wealth from people like you and me, and the most brilliant part? They've convinced us it's for our own good. They've made us believe that keeping our money in their institutions, trusting their retirement plans, following their financial advice is the responsible thing to do. The safe thing to do. But what if everything you've been told about financial security is actually the biggest con in modern history? What if the very institutions claiming to protect your wealth are the ones actively destroying it? Let me show you something that'll make your blood run cold. Pull up any inflation calculator online. I'll wait. Now type in $10,000 from the year 2000 and see what it's worth today. Go ahead, actually do it. The number you're seeing isn't a glitch. That $10,000 has the purchasing power of about $6,000 today. Your money lost 40% of its value just sitting there. 40%. Gone. Evaporated. And that's using the official government numbers, which, as we'll discuss, are heavily manipulated to make things look better than they actually are. The real inflation rate, the one that measures what you actually buy like food, housing, healthcare, education, is significantly higher. Now here's the part that should terrify you. This isn't an accident. This isn't some unfortunate side effect of economic policy. This is the intended outcome. Inflation is a deliberate tool, a hidden tax that doesn't require congressional approval, doesn't show up on your pay stub, and most people don't even understand they're paying it. And if you're about to click away because this sounds like some conspiracy theory, let me ask you this. Why does every single central bank in the world, including the Federal Reserve, target 2% inflation per year? Not zero. Not stability. 2% erosion of your purchasing power. Every year. Forever. They literally announce this as their goal. They print it in their policy statements. 2% wealth transfer from savers to borrowers, from the middle class to those who own assets, from you to them. Before we go deeper into this rabbit hole, do me a favor. If you've ever felt like something about the financial system just doesn't add up, if you've ever wondered why working hard and saving money doesn't seem to get you anywhere anymore, hit that like button. And subscribe, because what I'm about to show you over the next few minutes will fundamentally change how you see money, banks, and the entire economic system. This isn't theory. This isn't speculation. This is documented fact, hidden in plain sight in Federal Reserve reports, banking regulations, and government policies that 99% of people never read. Let's continue. The inflation tax works because it's invisible. When the government raises income taxes, people notice. They complain. They vote differently. Politicians lose elections over tax increases. But when they inflate the money supply, when they print trillions of dollars out of thin air like they did in 2020 and 2021, the effects are delayed, diffused, and easily blamed on other things. Supply chain issues, corporate greed, Putin, anything but the actual cause, which is that they created massive amounts of new money, diluting the value of every dollar you already owned. Imagine you own 10% of a company, 100 shares out of 1,000 total. You feel pretty good about that. Then one day the company issues 9,000 new shares and doesn't give you any. You still have your 100 shares, nothing was taken from you directly, but now you own just 1% of the company instead of 10%. That's exactly what happens when governments inflate the money supply. Your dollars didn't disappear, but they're now worth a fraction of what they used to be. And where does this newly created money go first? Does it go to you, sitting there with your savings account? Does it go to workers trying to pay rent? Of course not. It goes to banks. It goes to large corporations. It goes to government contractors. It goes to Wall Street. They get to spend the new money at yesterday's prices before inflation kicks in. By the time that money trickles down to regular people in the form of wages or prices, the inflation has already happened. You're getting paid in diluted dollars, while the insiders already bought their assets with strong dollars. This is called the Cantillon effect, named after an 18th century economist who first described it. Those closest to the money printer benefit most. Those furthest away, working-class people, savers, retirees on fixed incomes, they bear the full weight of inflation without any of the benefits. It's a wealth transfer mechanism so elegant, so built into the foundation of the modern monetary system, that calling it a conspiracy almost doesn't do it justice. It's just policy. Official, stated, documented policy. They're not even hiding it. You're just not supposed to think about it too hard. You're supposed to focus on your credit score, your mortgage payment, your monthly bills, and never look up at the larger machine that's systematically extracting value from your labor every single day of your life. But the inflation tax is just the beginning. Let's talk about something even more insidious, something millions of people are counting on right now without realizing it's probably the riskiest financial bet they'll ever make. Your government retirement, Social Security, pensions, Medicare. The social safety net that politicians promise will always be there, that you've been paying into your entire working life, that you're planning your future around. Here's what they don't tell you in the campaign commercials. Social Security is not a savings account. The money you've been paying in payroll taxes for the last 20, 30, 40 years, it's gone. Spent. Used to pay current retirees, used to fund other government programs, replaced with IOUs in the form of special treasury bonds that exist only on paper. The Social Security Trust Fund is scheduled to be depleted by 2034, according to the Social Security Administration's own projections. That's 10 years away, not some distant future problem for your grandkids to solve. A decade. When that happens, Social Security will only be able to pay out 77% of promised benefits. That's a 23% automatic cut for everyone depending on it. But even that assumes everything goes according to plan, that the economy doesn't hit a major recession, that tax revenues stay strong, that medical costs don't spiral even further out of control. When has anything in government ever gone according to plan? And you know what the proposed solutions are. Raise the retirement age, reduce benefits, increase payroll taxes. In other words, make you work longer, give you less, and charge you more for the privilege. That's the best-case scenario. The worst-case scenario, the one nobody in power wants to talk about because it would cause panic, is that the system simply can't be sustained mathematically. When Social Security was created in 1935, the average life expectancy was around 62 years, and the retirement age was 65. Most people died before collecting a dime, and those who did live long enough only collected for a few years. The system was built on the assumption that many workers would pay in and relatively few retirees would collect. Today, life expectancy is approaching 80, people retire at 62, or even earlier if they can, and they're collecting benefits for 20, 30, sometimes 40 years. Meanwhile, birth rates have collapsed. There are fewer workers paying into the system for every retiree taking out. The math doesn't work. It can't work. And every politician knows this, but admitting it would be political suicide, so they keep promising that Social Security will be there, that your retirement is secure, that you just need to keep paying those taxes and trust the system. They're lying to you. Not out of malice, necessarily, but because the alternative is admitting that the most sacred promise of the modern welfare state is built on a foundation of sand. Private pensions aren't much better. Across the country, state and local pension funds are underfunded by trillions of dollars. Illinois, California, New Jersey, Connecticut. These states have promised retirement benefits to teachers, firefighters, police officers, government workers, and they don't have anywhere near enough money to pay them. Companies have been dumping their pension obligations for decades, either declaring bankruptcy and dumping their plans onto the Federal Pension Benefit Guaranty Corporation, which itself is underfunded. Or simply freezing plans and switching to 401ks where you bear all the investment risk instead of the company. You know what happens when a pension fund can't meet its obligations? Benefits get cut. Retirees who worked 30 years and were promised a certain monthly payment suddenly get a letter saying, "Sorry, we can only pay you 60% now." And there's nothing you can do about it because the promises were never actually guaranteed. They were always contingent on everything going right, on investment returns staying high, on politicians not raiding the funds for other purposes, on the economy not collapsing. Betting your entire retirement on a government promise is like building your house on a floodplain and hoping it never rains. Maybe you'll get lucky. Maybe the system will hold together just long enough for you to get yours. But do you really want your financial future to depend on maybe? Now, let's talk about something that sounds like science fiction but is actually happening right now, being implemented in countries around the world, and coming to your bank account sooner than you think. Digital currencies. Central bank digital currencies, CBDCs. Governments and central banks are racing to create completely digital versions of their national currencies, and they're selling it to you as progress, as innovation, as making payments faster and easier. What they're not telling you is that digital currency gives them complete control over every dollar you own. Not just oversight, not just monitoring. Complete, total, instantaneous control. Think about how money works now. You have cash in your wallet, money in your bank account. If the government wants to freeze your assets, they need a court order. They need to go through legal processes. They need to notify the bank. There's friction in the system, time delays, procedural safeguards. With a central bank digital currency, all of that disappears. Your money exists only as data in a central ledger controlled by the government. They can freeze it instantly. They can impose negative interest rates, literally charging you to hold money, forcing you to spend or invest. They can set expiration dates on your currency, making it worthless if you don't use it by a certain time. They can program restrictions on what you're allowed to buy. Don't believe me? China is already doing this with their digital yuan. During COVID lockdowns, they programmed currency to only work within a certain geographic area. They can track every single transaction, know exactly what you're buying, where, when, and use that data however they want. Imagine getting on the wrong side of the government. Maybe you attend a protest they don't like. Maybe you donate to a political candidate or cause they oppose. Maybe you share the wrong opinion on social media. With digital currency, they don't need to arrest you. They don't need to charge you with a crime. They just turn off your money, instantly, remotely, without warning. You can't buy food, can't pay rent, can't put gas in your car. You're financially erased. And before you say that's extreme, that would never happen in a free country. Let me remind you what happened to Canadian truckers in 2022. They held protests. They didn't riot. They didn't burn buildings. They parked trucks and honked horns. And the Canadian government, a Western democracy, invoked emergency powers to freeze the bank accounts of protesters and even people who donated to them. No trial, no due process. Bank accounts just frozen. Credit cards stopped working. Some people couldn't buy groceries for their kids because they attended a peaceful protest. That happened with the current banking system, which still has some protections and procedures. Now imagine that power with instant digital control. No bank to serve as a middleman, no cash to fall back on, just direct government access to every cent you own, controlled at the push of a button. They're building the infrastructure for this right now. The Federal Reserve is researching it, the Bank of England is testing it, the European Central Bank is planning it, and they're going to sell it to you as convenient, as secure, as modern. What they won't tell you is that it's also a control grid, a financial surveillance system that would make Orwell's worst nightmares look quaint. Let's shift gears and talk about something more immediate. Something that's happening to you right now every time you walk into a bank branch. Your friendly neighborhood banker, the one who smiles and calls you by name and seems so helpful, has sales quotas. They're not there to help you. They're there to extract fees and sell you financial products that benefit the bank, not you. And the number one product they're trained to push on unsuspecting customers is one of the biggest legal scams in the financial industry. Capitalization bonds. In Brazil, they call them títulos de capitalização. In other countries, they go by different names, but the scam is the same. They sell it to you as a combination of savings and lottery. You make monthly payments, At the end of a certain period, you get some of your money back, and you're entered into prize drawings where you might win big. Sounds almost reasonable, right? Here's what they don't emphasize. First, the return on your money is abysmal, usually far below inflation, meaning you're guaranteed to lose purchasing power. Second, the odds of winning anything in the lottery drawings are astronomical, worse than regular lottery tickets. Third, and this is the kicker, if you need to withdraw your money early, you lose a huge percentage to penalties and fees. The bank takes your money, pays you almost nothing in return, uses your capital to invest and earn returns for themselves, gives you back less than you put in, and calls it a financial product. It's wealth extraction disguised as savings. But capitalization bonds are just one example. Let's talk about insurance products sold through banks, whole life insurance, universal life insurance. These are complex financial products that combine insurance with an investment component, and banks love selling them because the commissions are enormous. Here's what actually happens. You pay large premiums, much higher than you'd pay for simple term life insurance. A huge chunk of that premium goes to commissions, administrative fees, and the insurance company's profit. A small amount goes into an investment account that typically earns pathetic returns, far less than you'd earn in a basic index fund. And the insurance coverage itself is usually inadequate for what you actually need. Meanwhile, the bank representative who sold it to you just earned a commission equal to 50, 70, sometimes 100% of your first year's premium. They got paid thousands of dollars to put you into a product that benefits them enormously and benefits you barely at all. And here's the truly evil part. These products are deliberately made complicated. The contracts are hundreds of pages long, filled with jargon, exceptions, conditions, fine print. They're designed so that you don't understand them, so you trust the banker's explanation, so you sign up without realizing you're getting fleeced. Because if people actually understood how bad these products were, if they did the math on the returns versus the fees, if they compared it to simple alternatives like term insurance plus a regular investment account, nobody would ever buy them. The only reason these products exist is information asymmetry. The bank knows, you don't, and they profit from that gap in knowledge. Let's talk about overdraft fees, one of the most predatory practices in modern banking. You swipe your card for a coffee, transaction is $3. You think you have $5 in your account, but you actually have $4.50 because some other charge posted that you forgot about. The bank approves the transaction. That's important. They approve it. They could decline it, but they choose not to. Then they charge you a $35 overdraft fee. That $3 coffee just cost you $38, and if you don't notice right away and you make another small purchase, that's another $35 fee. People have been charged hundreds of dollars in overdraft fees in a single day for transactions totaling less than $20. Banks earn tens of billions of dollars per year from overdraft fees, and the majority of those fees are paid by the people who can least afford them. People living paycheck to paycheck. People struggling financially. The system is designed to extract maximum fees from the most vulnerable customers. And the banks know exactly what they're doing. They've been caught deliberately ordering transactions to maximize overdraft fees, processing the largest transactions first, even if they came in later so that they can drain the account and then hit multiple smaller transactions with fees. When they get caught and sued, they pay a fine that's a tiny fraction of the fees they collected and keep doing it. Because it's profitable, because the system is set up to protect banks, not customers. Credit cards are another extraction mechanism most people don't fully understand. The average credit card interest rate in the United States is over 20%. 20%. If you carry a balance of $5,000 and only make minimum payments, you'll end up paying more than $7,000 in interest over the years it takes to pay it off. You'll pay $12,000 total for $5,000 worth of purchases. That's not borrowing money. That's indentured servitude, and credit card companies specifically design their minimum payments to keep you in debt as long as possible. The minimum payment is calculated to mostly cover interest with just a tiny amount going to principal, ensuring that your balance barely goes down, ensuring that you keep paying interest month after month, year after year. They make it easy to get into debt and nearly impossible to get out. But here's what really should make you angry. Those same banks that charge you 20% on your credit card, they borrow money from the Federal Reserve at near 0%. They're paying essentially nothing to borrow money, then turning around and lending it to you at 20, 25, sometimes 30%. They're making risk-free profit on the spread, and if you default, well, they've already made so much in interest and fees that they're still profitable overall. The system is designed to keep you in debt, keep you paying interest, keep you generating fees, while the bank takes zero risk and maximum reward. Now you might be thinking, okay, this is all depressing, but what can I actually do about it? I need a bank account, I need to save for retirement, I need to exist in the modern financial system. And you're right, you do. But you don't have to be a victim. You don't have to play by their rules completely. First, understand that cash in a savings account is not a long-term wealth strategy. It's slowly being destroyed by inflation. Savings accounts are for emergency funds, for money you need to access immediately. That's it. Everything else needs to be in assets that maintain or grow their value faster than inflation. Stocks, real estate, commodities, things that represent real value, not just paper currency. Second, minimize your dependence on bank products. Don't buy anything a bank salesperson recommends without researching it yourself first. Actually read the terms, compare alternatives, run the numbers. If they're making a commission on it, assume it's not in your best interest until proven otherwise. Third, use credit cards strategically if you must use them at all. Pay the full balance every month. Never carry a balance. Use them for the rewards or cashback if you're disciplined, but never pay a cent in interest or fees. The moment you do, you've lost. Fourth, diversify where you keep your wealth. Don't keep everything in one bank. Don't keep everything in the same currency. Don't keep everything in the traditional financial system. Some people are turning to Bitcoin and cryptocurrencies for this reason, to have money outside the banking system that can't be frozen or confiscated. I'm not saying you should or shouldn't do that, but I am saying don't keep all your eggs in one basket controlled by institutions that have repeatedly proven they don't have your best interests at heart. Fifth, educate yourself. The reason this system works is because most people don't understand it. They don't understand inflation. They don't understand how banking works. They don't understand the difference between an asset and a liability. They certainly don't read the fine print on their bank statements or credit card agreements. The system thrives on financial illiteracy. Every hour you spend learning about money, about investing, about how the financial system actually works, is worth more than any salary increase you'll ever get. Because it's not just about earning more. It's about keeping what you earn and making it work for you instead of against you. The bankers and government officials running this system understand money. That's why they have it. If you don't understand it, you're going to keep having less of it, no matter how hard you work. So here's where we are. You've been born into a system designed to extract wealth from you through invisible taxes like inflation, through promises that won't be kept like government retirement, through control mechanisms like digital currencies, and through predatory banking products and practices. This isn't a theory. This isn't paranoia. This is documented fact, playing out in slow motion right in front of you. And the saddest part? Most people will never figure it out. They'll work 40 years, save diligently, trust the system, and retire broke or dependent on government benefits that aren't enough to live on. They'll spend their entire lives building someone else's wealth instead of their own. But you're still here, which means you're not most people. You saw something was wrong. You wanted answers. Now you have them. The question is, what are you going to do with this information? If this made you angry, good. Use that anger. Let it motivate you to take control of your financial future, to stop trusting institutions that have never deserved your trust, to educate yourself and make smarter decisions. Hit that subscribe button right now because this channel exists to pull back the curtain on the systems that control your life. Smash the like button so more people see this and wake up to what's being done to them. And leave a comment, even if you disagree, even if you think I'm wrong, even if this made you uncomfortable. Tell me what you think. Tell me your experience with banks or government programs or getting trapped in debt. Let's have a real conversation about this because it affects every single person watching this. The system wins when we stay silent, when we don't talk about this, when we just accept it as normal. So don't stay silent, speak up, share this, and take back control of your financial future because nobody else is going to do it for you.